Hello and good day. This is the daily analysis of the Bitcoin symbol for January 25th. Over the past week, the price has had a bearish bias, and it's expected that this trend will continue. If last week the price had bullish momentum, it would have collected the buy-side liquidity and eventually reached the BP zone. The monthly R, which has been optimized for weekly and daily, has reacted, and currently the price is in a 2-week range, where this bearish candle is considered our high and low. If the price manages to break the high of 97,924 and closes above the BPR zone, it'll enter a bullish phase, and we can predict higher price targets for Bitcoin. But if it closes below the 8,600 level, the price could continue its decline, and we might see deeper drops in the market. By analyzing Bitcoin's daily time frame, we can see that after a ranging movement, the price moved upward. It collected the buy-side liquidity. In that area, it closed at an order block and, with an aggressive move upward, reacted to the BPR zone and then entered a bearish phase again. Currently, it's in a consolidation state, which has formed a pin bar candle for us. It reacted to the FVG zone, where we can identify a trading strategy in this section. If the price moves upward and forms higher highs, and if it closes inside a doji candle, it forms the second trading strategy, which you can use to enter a sell position targeting lower lows. But if the price moves upward and collects the liquidity on the buy side, then the entry point is after the close and the formation of a strong candle. The trend is bullish, stop loss goes behind the swing, and we can enter the trade with a target of 1-to-1, 1-to-2, or 1-to-3 risk-reward ratio. Also, with increasing momentum, the price can enter a bullish phase and move upward. There's a highly significant level located in this area. This is the swing failure strategy. The pattern has formed here, where the price moves upward and then returns within the range. A range for the swing failure pattern strategy is formed for us, and we just need to wait for a price pullback. We should watch for a pullback to the FG level range of 93,905 to 94,821, and if a reversal signal appears, in a bullish trend, we can enter a sell position. But if the price forms the Ryan Soldier strategy, or strategy number 2, we can use this opportunity for a sell position, and also with a drop, if the price moves toward buy and liquidity is collected on the sell side. We can also use these situations to enter a buy position where the first target for identifying a trading strategy is liquidity collection at level 826,428, which means after this liquidity is collected, we should wait for a price movement in the market. By analyzing the 4-hour time frame of Bitcoin, we can observe the price's ranging movement in this section. It's formed a pin bar candle here, where liquidity is present. It collected the sell side liquidity, and with the formation of a pin bar candle, the price entered. It entered a consolidation phase, and with an aggressive move upward, it collected the buy side liquidity. It entered a 4-hour FVG zone, but failed to close there. And again, it closed within that consolidation zone after a bearish move, and liquidity was collected on the sell side again. It is currently forming a strategy number 2. If it forms a lower low and the bearish trend continues, we can use this opportunity to enter a buy position. Set the stop loss behind the swing, aiming for the target. The levels are at the price of 91,260, and we can set the stop loss behind the 97,113 level. Also, with increasing momentum in the market, the price can move downward. It can collect a liquidity on the sell side from the 87,263 level, and if it closes within the range, we can use this opportunity as a Ryan Soldier strategy. The entry point is after identifying the market turning bullish, with a stop loss set at the swing. And finally, putty. We set our target based on a risk-reward ratio of 1-to-1, 1-to-2, or the swings at the 91,216 level. If the price manages to close below the low in the consolidation range, we can predict a bearish market. However, if it closes above the highs in this section and the FEG area, we can't predict the market will turn bullish toward higher levels. We can anticipate that liquidity will be held on the buy side at the 95,924 level and the 97,165 level. Here, we can make a prediction for the price. By analyzing, looking at the chart, we see that after a bullish move in the limited sell side area, the price formed a liquidity pool, and there are two important zones here. The first zone is a BPR area, and the next zone is a candle. The block that collected the liquidity from the sell side re-entered the zone, and a strategy. A swing failure pattern is also present here. So after the price closes below the consolidation area, we can predict that the price will enter the order block zone. And we can use this opportunity to enter a buy position, targeting the levels between 98,000 and 100,000. We can anticipate this for it. If the downward trend continues, we can look for buy positions within the BPR zone in the market. By reviewing the ETF funds, we see that the net inflow has been negative and liquidity has been withdrawn from the ETFs. ETF funds have been withdrawn, and in the past 4 days, on the last day alone, $103 million were pulled out of the ETFs, which indicates a negative outlook in fear in the crypto market. By examining the Fear and Greed Index, the market is at the 34 level, and it is currently in the territory of the fear zone, which strongly indicates and suggests a predominantly bearish market sentiment to us. We can also carefully examine and analyze the significant high importance liquidation levels, specifically on CoinGlass, where we clearly see that whale orders and large trades are at the levels of significance between 90,000 to 91,000 for sell order positions. And looking specifically at the 88,000 to around the 8,800 price level, which currently serves as the primary buy order zones for traders. Within the consolidation range that we identified is located. If the price closes below the 87,245 level, it could continue its downward trend and keep going until it reaches two highly significant zones. That is the 86,000 to 85,000 zone and also the 85,000 to 84,000 zone. These are considered highly significant zones where whale orders and large trades are concentrated, which are in the 2 BPR zones, and the order block candle is located here. On the time frame, 1 hour. The price has moved downward within this range. It has entered the BPR zone and ultimately reacted to the order block candle and is now consolidating in a bullish phase, which could lead to a continued uptrend. It continues on its own to collect the buy-side liquidity here, and in this rejection block area, we can look for a sell position in the market. Be successful and profitable based on effective trading strategies.